right? So this side is your resistance. This side is your resistance. You're expecting price to go up and then reverse. But then price went to this side, made a brief consolidation, price went up. So this side becomes what? A demand structure, a rally based rally. So if price should get back to this zone, you'll be expecting price to do what? Go back up. If you actually take this to the 10-minute time frame, you actually see the zone much clearer. Right? It goes up, the brief consolidation, it goes back up. And this side will be a drop base rally. So actually you have two zones, which is going to be this side and then the other side. If price goes up, bounce goes up, breaks this is going to be the next zone that you'll be looking for price to do what? Go back up.
Mm.
Right? This side was also a demand and supply structure. Price moved down, right? But this zone wasn't strong enough like this one. So even though price moved down, price came back to break this level. And then this level was actually the best one. And then price moved all the way down. So what I'll be doing today is I'll be going over with this pair with you. What pair is this? Okay, yeah. The pound USD. And then we'll be looking for demand and supply zones. Because the more you look for demand and supply zones, it actually helps you, identify more demand and supply zone. And
Not demand.
the thing that you need to remember is that it has to be quick, right? It goes up and then it goes back down. This side is going to be a demand and supply structure. This side is also going to be a demand and supply structure.
Mm.
So, all right, let's talk about the other one. Then we'll get back to this one. All right. So,
Okay.
first of all, what you need to know is that where is the market? Is the market trending up or down, right? And I can clearly tell that this is a downtrend. So what I'm looking to do is I'm looking to take entries, right? But at this side, I'm not really sure exactly where market is going to retrace to. But with the help of demand and supply, I can tell you that this is a drop base drop, right? So all I have to do is draw my zone at the place where there was the brief, at the place where the brief consolidation happened, right? So a drop and then the brief consolidation and then the drop. Because basically what I'm using is I'm using the
Okay,
time.
so sorry, so
It's
it
fine.
means that we can have multiple demand and supply structures.
Yeah, you can have look within this, you can have multiple structures. But the thing is that which one do you think price is really gonna respect? Because all these things that you see are demand and supply structure, right? But then do you think market is gonna respect this one better than this one? Or this one better than this one? That is where the challenge comes in, right? Because every structure, most do you see this? This is a rally base drop, right? And this is a supply structure. If you actually remember, I don't have the PDF. Let me see if I have the PDF. Right. So these are the types, and then with the types, as you can see, this, the one that I just talked about is this, right? A rally base drop, and this is a supply structure, a supply. So your base is going to be your supply. So a rally to the upside, a brief consolidation, and then a drop. If you see a lot of consolidation, that's not a demand or that's not a supply structure, right? So this it went up brief, right, and it came back down. So as you can see, market went to the same place, retested it, and went back down. And this is three times your risk. Your risk is what? Let's say 30 pips, right? Your take profit is going to be 90 pips. This was your entry. It moved almost 150, 90 pips, which is this side. Take profit one hit. That's it, right? You're done. So let's look at this one. I have a rally base rally. All you need to do is just use this types. We have four types, right? For a rally, for a supply structure, we have two types. For a demand structure, we have two types. A demand structure is going to be a drop base rally, right? And then a rally base rally for a demand structure. For a supply structure, it's going to be supply is selling, right? So it's going to be a drop, this base, and then a drop, and then a rally to the upside and a drop. So for supply structure, the last word is always going to be drop. For a demand structure, the last word is always going to be what? Rally. So it rallies to the upside and it drops. It drops base and it keeps dropping, right? For supply. And then for demand, same thing. It goes up, base, it goes back up. It comes down, base, and it goes back up, right? So this falls under a supply structure because we have a drop, the base, and then a drop. So what I'll be waiting for, or what I'll be looking for market to do is I'll be looking for market to go back up to this side, right? Within this zone. This side is gonna be your entry or your sell limit, right? The distal line, this line. And then your proximal line, which is this. Well, your proximal line is gonna be your entry and your distal line is gonna be your stop loss. Always. You'll be expecting price to go into the zone and then go back down. This can break, right? That is why you always need to use risk management. One advantage of demand and supply is you can actually lose 3 times of this trade, and two of this trade is gonna make up your losses if you actually use the risk management or the risk to reward ratio. So I'll be expecting price to go back up and then retrace. Right now, let's see what price does. Price goes back down. Okay, since price goes back down, I have a drop, base, drop. So I have another what structure right here, which is this. Remember, I told you can use this wick, but if the wick is too long, you just adjust this to the middle. So this is going to be my entry. The middle is going to be the middle part. So if I have this, and why did I choose this as my demand? Sorry, why did I choose this as my supply zone? Why did I also choose this as my supply zone? If you remember what I told you, you need to look at your left side, right? Once you look at your left side, you realize that there was a support level, right? That got broken. So basically, if this is my support level, what am I expecting price to do? If I extend this line, I'm expecting price to hit this line, react to this side, and go back up. I saw this reaction and price went down. If I'm taking my entry, I'm expecting price to go back to this what resistance, and price will do what? Will go back down. But this demand, this supply structure is gonna give me that perfect entry, right? Because imagine you have a very big resistance over here. Stop loss is always gonna be big. But once you have this little thing, then your stop loss is gonna be this side. It's gonna be your entry, which is this side, and then your stop loss is gonna be above this. All right, so let me take this off. So always remember you have to look to your left. Do you have like a resistance that was flipped to a demand structure? So what I'll be expecting is I'm expecting price to go back up, hit this, and then do what? Go back down. Now I'm gonna play this and let's see what price does. Price went down, right? Look, do you see? Price hit your entry and then price goes back down. And if you can see, this is what third times your what? Remember I told you it's supposed to be third times your risk. So let's imagine this is 30 pips. Your take profit is gonna be 90. This is almost this look 200 and something. Your first take profit is gonna be 90. Your first take profit get hit, and then your second take profit you can actually extend this to whichever one that you want, right? Now, remember this, right? We have another structure, which is a rally to the upside, the base, and then a what? A drop. So this is still what? A supply zone. And the market is still trending. So all I'm doing is I'm trying to catch those pullbacks until the market breaks a structure. Then I'll be looking to do what? To buy. But since the
Bye.
market is in a downtrend, then all I'm doing is catching those pullbacks and still selling, right? So the next zone is going to be here. If you take this to the 2 hour time frame, you see it, right? A brief consolidation and then rally to the downside. This is the consolidation, a rally base and then drop. So I'll be expecting price to do what? Retrace to the side and take my entry. Let's see. Price came to my level. right?
Boom.
Price went
Hmm.
down. So this is your risk is this one. This is your risk. This so your take profit is gonna be 40 times 3. Let's say 120, right? 120, 120, 120, 120, 120. 120 is gonna be at this side. But look, price moved all the way down. If I was trading this, my take profit is always gonna be at this side. Because you know that when once you have liquidity, this highs price intend to go at that place to grab liquidity. Like this side, price will go down and grab this. So this will be my take profit. So you can actually extend your take profit. But what I usually do is I have two trades. The first one is going to be the risk reward ratio, which is one to what? One to 1 to 3. And then maybe my second trade is going to be my regular take profit. Maybe I'll extend this. Now, guess what? I have a rally to the upside, a base. I told you this, you don't really have to consider this one, right? It's always the last one. How was the strength of the move? Is it really strong? Once you have that strongness of the move, then you take that move. I mean, you use that consolidation zone as your demand or supply, depending on the direction of the price. So this went down with a very strong candlestick. You can actually choose this as your what? Demand structure. But let's look at something. If this went, if this side, from this side, right, price moved 50 pips. From this side, price moved 170 pips. Which one would you choose as your supply structure?
The one with the bigger move.
Exactly, the one with it, because this side is the place that what banks sold. Once the big banks sell something, it moves longer than retail selling, right? So this side will be the zone that I'll be taking my entry. Even though price might retrace to this side and you might see a rejection, but price wouldn't go down all the way down, right? So I'll choose this side as my what? My entry.
Hmm.
So this candlestick in the middle, I'm going to use this one, the doji. Or you can actually use this side, half of this. But usually you want to secure your what trace, because sometimes the trade will go to this side, it wouldn't get to this side and it will retrace. So it's best for you to use the whole candlestick if the candlestick is really small. But if you have a very huge candlestick, then use half. So let's see what price did. Look,
Wow.
price came to this demand structure, came back
Hmm.
down. The stop loss is going to be above the last week. Remember, I told you, right? This wouldn't hit, but this still went down. Take profit hit.
Our price came back to that zone
Yeah, it came
again.
back to, but it didn't. I don't think that it came back to that zone. But also,
Okay.
we have something called imbalance. This is imbalance. This side. So price will retrace half. This is also a different concept. Once you study the what is it called, WWA, you understand this one much clearer. This side is imbalance. So this side is basically imbalance because you only have sellers selling at this side, right? This is pure selling. You don't see any wick.
Hmm.
Remember at this side, right? I have wicks here, so this wouldn't be called imbalance because I have sellers selling at this side. I have buyers also buying, but this side is just pure selling. It's just a full candlestick. So this side will be imbalance, and imbalance serves as what? I mean, they serves as magnets. They pull price. So this might,
Back to
yeah,
where.
yeah. So let's see what price does. So price get to this region. Let me extend this.
At least I think with this strategy, somebody can even get 10 pips, like, easily from there.
This is how this. Remember, I was talking about how to flip account. This is how you flip account. You look for this
Mhm.
one trade. You take your entry here. What I usually do, I have alarm, right? So if this reaches to this side, all I do is just go on my chart, load my account at this side. So if
Mm.
this should hit my stop loss, what I lose is I lose just this. Let's say I lose two of these trades. Just one trade will just recover my loss. If you use risk management and you use the same trades for the same, let's say you put 10 trades for this, use the same 10 trades for the same 10 trades. Because if you use 10 trades, you blow up your account and you use two. Two goes into profit. That's different. But wouldn't
Ah,
recover your losses. See, this went down. But one
Wow.
thing you should know is that look, now let's look at something. This is where the WWA comes in. So I was, explaining just a little bit about that one. Look at what, and this is not even WWA. This is just common market structure, right? Look at this. Market is making lower lows. Market is making lower lows. As you can see, anytime markets come down, market breaks this lows. Market broke this low. Now at this side, it looks like market is what changing in direction.
Like
So
a
once
double bottom. Hmm.
exactly once I know what is WWA, so I'll send you. I have the course on WWA. I'll send you the WWA course. And you actually look at it. So once, as you can see, right, this is structure. This is structure. This is structure. Price came down to the side. Price came down to the side. This side got broken. This side got broken. Now, what I'm basically saying is that market went up, retrace. Market never came to this side. Now, this is showing me what indications that price is trying to go to the upside. So this is where I'll be looking for what demand zones, right? Because price is changing in direction. Look, this got broken, this got broken, fine. But from this side, it looks like this side is not getting breaking broken. Look at something around the side. This was a structure that got broken. Now this is showing you weakness in price. If you actually look at this chart, right, I have something called SOW, right, and then BOS. So this is called break of structure. This is called strength of weakness, right? So anytime you have structures getting breaking, it shows you that market is trying to go to that direction, right? If market is going up, then I'm expecting to see high highs, high highs, high highs. But then if market is breaking important levels, then this is showing me what weakness in price. So it's the same thing that is happening with the pound pair. Wait, what is this? Um, sorry. Okay, yeah, it's the same thing that is happening with the pound pair, right? Price came down. Now I have this next structure. What I'm trying to find is I'm trying to find a demand structure. Now let's look at this. If you actually remember what I said about the previous lesson, I told you that if price comes down and then price goes up, it has to be quick, right? Comes down and goes back up. Then that side is gonna be what? My demand structure. So I'm gonna have this side as my demand structure. I could have chosen this side to be my demand structure, right? This side. But I just want to play safe. Sometimes the market plays tricks and then the market will break this level, comes in, and then goes back up. And then, you lose your trade. But even though you had the right direction. So I'm just trying to play safe. This is what I'll do. I have this zone, right? And I'll be expecting price to retrace to this zone and then go back up. Now, since I have this zone, what I'll do is I'll be waiting for price to hit this level. Remember what I said, price is changing in direction. This is showing you that price is changing in direction, right? So once I know that price is changing in direction here, then I can look for what? Demand zones. If price is not changing in direction, then you'll be looking for what? Supply zones. At this side, you can clearly see this side got broken. This side also got broken. This side also got broken. This side also got broken. So market is making what? High highs. And if you can see this lows, market never reaches this lows, right? So I'll be looking to take my entry. I'll be looking for demand zones. So this is my demand zone. This is pretty huge, right? This is pretty huge. 33 pips. But then your take profit can be your first take profit is gonna be, let's say, 100 pips, right? And then my second take profit, since I know this is changing in direction, then I can probably, for me, what I usually do is I'll just extend this all the way up. But let's have this around this side, 300 pips. Now let's see, right? Price get into this demand structure, and then you can see a very huge candlestick going up. This is actually show you indications that price is what gonna sell. I mean gonna buy. This is how you flip account. Price gets to this side, you load your entry. Don't wait for price to show you indications before you take your entry. What if price goes? up, this is the indication, and it goes back down. Take your
Mm.
entry right at this side, so that if this should in case go sideways, you don't lose this from this side to this side, which is
To
like
this
50
side.
pips. 50 pips. If price goes sideways, this is your entry. You only lose this instead of losing this. This is why, like, I don't really wait for confirmation. Hit this side, you take your trade confirmation, because some confirmation can go sideways. So let's see. Price goes up, goes back up, goes back up from this structure, right? This side got broken. I'm looking to take another trade at this side. This side hit my stop loss. So this is the next demand zone that I'm looking at. Remember, this went from this side to this side. So this is much stronger than this one, right? But sometimes price wouldn't retrace all the way to this side. Sometimes price will retrace to this side and then go back up. But then remember what I said. You lose this trade, which is 30 pips, right? One trade will make this loss, will make up this loss. So let me take this off. We'll be looking at this structure. But I'm still holding this position from this side, right? This side triggered right here, as you can see. You still need to secure your profit though. You still need to secure your profit. Don't think that since this side is getting broken, you always need to look at structures. If you realize that this structure, like price is really struggling to break this structure and market is creating lower lows, then you close your trade, right? So this is 30 pips. Your take profit is supposed to be what? Let's say 90 pips. From this side to this side is 100 and let's say 110, right? Take profit hit. So you are done. If you want to hold your trade to the side, that's fine. So first take profit hit, right? Goes back up. So to be honest, I'll close my trade around the side because I don't know why you be holding a trade which has almost 200 pips, and then you look at your trade to reverse all the way to your stop loss. So I'll be closing my trade when this structure get broken. Let's look at different trades, right? Let's look at the pound JPY. So with the pound JPY, right? Remember what I said, it has to be quick, up and down. So this was a pretty quick move to the downside, right? Market came to this side and then jumped from this side. So meaning there is a lot of orders around this side. But then since market went from this side to this side, if I'm taking a demand or supply zone, right, this is what you need to put in mind. If let's say I throw a stone to this side, right? And then someone throws I throw a stone and then the stone went to this side. And then someone throws a stone and then the stone goes to this side. Which one is stronger? It's obviously this one. So if price should return to this one will move. Since this one is stronger, this one will move to a what? A high distance than this one because this one is weak. This one is not really strong as compared to this. So this one might go what to your direction, but this one wouldn't go as far as this. So since this went from this side to this side, and this right, this side is also a demand zone, right? But so yeah, demand zone. So since this moved from this side to this side, then a better place to look for demand zones would be at this side, right? And to be honest with you, like I said, the more you practice, the more you get used to these zones. To be honest with you, a beginner will never pick this zone, right, as their demand and supply zone because this is really choppy. This is really choppy. Things like this is really choppy. They want clean stuff like what I just showed you. which was the euro pair, right? This was pretty clean, right? It rallied to the upside base and then it went back down. These are clean structures. Now let me show you an example of another clean structure. Let me see. Mm, hopefully I find one. Okay, so this will also be a structure, right? From this wick to this wick. A rally base rally, right? A rally base rally. And then when you take this to the lower time frame, you can actually adjust your entries. So on the 1 hour time frame, this is a rally base rally. So you'll be expecting price to hit this level and go back up. And then also let's see if we can actually find better examples. Oh yeah, this one. The Euro AUD. No, actually it's the NZD. This one. Okay, so let's look at something around the side. This was a very strong move to the downside, right? Once you have that strong move, meaning there is a lot of orders around that region. So all you have to look for is where was the order being placed, right? Where is it? Yeah, let's say. So once I know this, I put my 10 here, right? But since this is really huge, I want to go to a lower time frame to adjust what my entry. Or you can also take your entry from this side. But what I'll do is I'll prefer taking my entry on the lower time frame because that is really huge. Still not seeing. So let me go to the 3 minute time frame. Damn, this is gonna be hard. Right. So I'm just gonna put a line just to see this and then move to a 3 minute time frame. Wait, what? I don't know why it's not working, but let's just stick to the 1 minute time frame. Right. So this is gonna be my entry. As you can see, price. So I'll be actually looking to find entries around this region, but my 3 minute time frame is not working. So let's imagine this is our entry. Our risk is this side, 50 pips. Our take profit is going to be 150. Right. This actually moved 100 and yeah, look, 160. So 150 is going to be your take profit. Once your take profit hit, you are done. Don't try looking for a different entry and then extend. You can actually extend. Look, this went all the way from this side to this side, right? And then let's say this was your first entry, right? So I'm trying to find a different entry. My next entry is going to be at this side, right? This candlestick in the middle, or you can use half of it. Half, as you can see, it's not going to hit. And then the next one is going to be this consolidation before the momentum rally, right? But as you can see, price didn't hit this level. But still, if price is making lower lows, you still find those entries. So at this side, you might choose this, right? From this side to this side as your structure. And then this side, I'm going to choose this as my structure because right at this side, I'm seeing a very strong candlestick to the downside, right? You can actually choose this, right? This candlestick, this whole candlestick, or the body. But remember what I told you, if the candlestick is really small, you use the whole candlestick. So if I'm using the whole candlestick, then my entry is going to be at this side. So this is my first entry, second entry, third entry, right? Once you notice that price is changing in direction, once you notice that price is changing, what? So yeah, once you notice that price is changing in direction, meaning levels are getting broken, right? This level got broken here, this level got broken here. Then you'll be looking to take what? You'll be looking to find demand zones. Now let's look at something here. I have a rally to the upside, I have a base, and then I have a rally. But this base looks really ugly. But remember what I said, you don't look at this, you only look at the strength of the candlestick. This is really long going to the upside. Shows that there was what? Buy orders around
Buying
this.
momentum.
Exactly. The momentum candlestick. So if the momentum candlestick is really strong, if it's really strong, and even this is choppy, you use that region at this side, right? At this side, as you can tell, price move 3 times your risk. This is what I'm telling. If you use that risk, then right, you actually make your money. Price actually moved not 3 times, but price moved up. But this is not really strong compared to this one. So this is where I'll be taking my entry. You extend this. You see that price came here, price moved up, price came back to the side, and price went up. Right. So it's usually the strength of the candles. Look, this went down. So what I was talking about, beginners wouldn't take this trade, wouldn't take this trade. They will always look for something like this, right? A strong move to the downside, and then they'll take this trade. A strong move to the upside, and then they'll take this trade. But also you need to know, this is what you need to do. Is market trending? If market is consolidating like something like this, right? At this side, look at something. This structure got broken right here. So you wouldn't consider this as a demand and supply structure. But if you keep practicing, right, you can actually see that this side is what? A demand structure. Look at how price moved away from this region. Straight 90 degrees, right? 90 degrees all the way down. If price goes like this, boom, all the way down, 90 degrees, it shows a very strong, it shows that the candlestick is really strong, like this, 90 degrees up, right? But since price is trending, you don't want to be going counter. You can try, but it's always best to follow the trend. So price return to this, right? Price goes all the way down to this side. Even though you have multiple touches around the side, price still went all the way down. What else? Okay, this side too. If you can actually see, right? This is the place that the momentum candlestick started. So I'm gonna use this side. Remember what I said? The basing candlestick before the momentum rally. This is exactly where the strongness of the candlesticks started. So basically, it's more about practice. The more you practice, the more you analyze your chart, you realize that there's a lot of things. It's not just looking at one candlestick and then the candlestick. It's not just looking at one candlestick and then you draw your level around that place. Sometimes it's how the candlestick moves. This one moved really long, and then you have smaller candlesticks around this region, right? And then the momentum actually started from this side. So this is the place that I'll be using as what? My demand structure. And also, if you actually remember what I said, you have to look at the left side. What do we have? We have what? A resistance. Market was actually struggling to break this side. This resistance got what? Broken. I'm expecting price to retrace back up. For people that trade price action, this is what they'll do. And then once price hit this side, they might take their entry, put their stop loss here. This will come and hit your stop loss. Boom, take you out of the trade, and then goes back into your direction. But demand and supply, this is exactly where you're looking for to take your entry, right? Price hit this level, it goes back up. Now let's see. It's actually started from this side to this side, which is what? 40 pips. The take profit is going to be 120, more than 120. Take profit hit, first one, right? So if you have any questions, just let me know. I think that is pretty much for this lesson. I actually recorded this lesson, so if you need this lesson, just let me know. I'll send it to you.
All right, cool, cool. Yeah. Oh.
Did you say something?
No, no, I said it's cool. It's cool.
Oh, okay. And then this
Yeah.
this is this is the WWA. Let me see if I can find. It's around this. It's around this. Let me see. See, actually, it's. I think it's. Yeah, this one. I think most of you guys have it. This one. Have you checked this?
Simply is this.
Do you guys have this?
For the Wyckoff?
Yeah, it looks like the Wyckoff, but it's actually the WWA.
Oh no, no,
This one.
I don't have this.
It talks about a whole lot of things. How to get sniper entries, right? This side. So this is actually the demand structure. This side is the demand structure. This line. And then when price is approaching this demand structure, it actually forms Wyckoff theory. So once you find the demand structure, let's look at a very good example and then we end this lesson. So I'm going to go back to the pound USD. So yeah, what was my entry? Our price get to this region. What I do is I take this to the 50-minute time frame, a lower time frame, and I start drawing my Wyckoff schematic, right? I have this level, this level, and this level. So this will be um, the OSW, right? Because this structure is getting breaking. So meaning this side is showing me strength of what? Weakness. So if price should go back up, then the first level, which is this side, what was the candlestick? This will be my entry. So instead of having this big stop loss from this side to this side, I will just not take this entry. I'll just wait for this schematic to form, and then when price goes up, take my entry at this side. And this becomes what? If you guys can see, this is actually 13 pips compared to this whole thing, 40 pips. So even though demand and supply, you have the sniper entries, right? But sometimes if you actually look at your trade, this will be playing around with you. You might think, oh, this is going to go down. But when you're using Wyckoff, it tells you that this is showing you weakness in price. Look, structures are getting broken. Structures. So once this goes back up, you know that it will probably retest this side. Or if you have, like I said, I'm not really teaching Wyckoff. So if you look at this lesson, it will tell you this is the UTAD. So this is my UTAD. Price goes back up to test it, which is the test. This candlestick right here, test, and it goes back down. Price test this and it goes back down. This is also a test and it goes back down. But I'll send you this course once I'm done with the lesson. And also, let's look at something here. What is this? A rally based drop.
Drop.
Right, even though this drop is not really huge, a rally based drop. And remember what I say, you have to look at the left side. This is what? A resistance. This broke this resistance, went back up and then went down. So if they should go back up, then obviously I'm expecting price to go down. So it's always about the left side. Do you have a resistance? Yes, no. If you don't have a resistance, then you shouldn't be taking that trade. So the types is a rally base, sorry, a drop base drop, right? And then a drop base rally. And then what? a rally base drop, and then a rally base rally. That's it. And this.